What's up, everybody? It's the Digital World Podcast. Now, today we got quite a bit of interesting news that I think you're gonna like to hear. And so let's jump right into it. We see Goldman Sachs is getting on board the crypto train. And once these big institutions start pouring in and the quote unquote infrastructure starts to be built, then you know it's go time. Okay, we need these big boys to be ready to go in order for this thing to take off. And like I've been saying, I've been hammering this down. We need some regulatory clarity. And until these major players get their gains or reap the rewards, get the last slick off of their investment, then we'll be able to flip the switch. And it may get a little turbulent and rocky in the near short to medium term, maybe, but once all this regulatory clarity is set, then those assets with utility will take over. Now let's watch this video of Goldman Sachs pouring
breaking news coming from CNBC.com. Banking reporter Hugh Sun. Goldman Sachs is getting close to offering Bitcoin investment products to its wealthy clients. Hugh Sun joins us now. Does Goldman know Bitcoin was like $4,000 like 18 months ago, and now it's like 57,000? This is part of their expertise. Hugh?
Well, Joe, I think those dizzying charts that everybody is looking at and salivating over, that's one of the reasons why Goldman and others are getting into this. They are in a client business. So when clients of Goldman Sachs or clients of Morgan Stanley, call up their financial advisor and say, should I have an allocation to Bitcoin? Look at what it's done. Should I have a 1%, 2%, 3% allocation to this emerging asset class? They've had to say, well, as a firm, we can't really recommend that. Well, that changes, and that changes very, very soon. So as we report exclusively on CNBC.com, Goldman Sachs is very close, and in the second quarter will begin offering Bitcoin and other digital asset-related investments to its private wealth management clients. This is sort of the Tony private bank of Goldman Sachs. They really target people and endowments with at least 25 million in assets under management.
And so, prepare yourself. They're coming. They're coming. Okay, and here, Making Me Fresh posted a thread of videos yesterday that I found very insightful. And here he says Gary Gensler and Hester Peirce in 2019 talking about all the things that are taking place right now. I have more clips from this interview. Offers a very different perspective on Gensler speaking from outside the SEC with Hester Peirce, who's at the SEC then and still is. Now, watch this video.
Jason Rockwood, I'm the country manager for VeChain. We deal a lot with enterprise clients, and one of the things that we see over and over is that enterprises are reluctant to get involved with blockchain and crypto because they're not sure how to properly classify the asset or to manage some of the regulatory confusion around it. My question for you guys is, do you think that is the work of the SEC going to impact that at all, or do you think that that's other departments that handle that, and or do you see enterprise clarity coming so that we can open the door more widely to their participation in this ecosystem as well?
I think there's real interest from a lot of institutional players now in the market, so that means that we are being pushed to make some decisions, and I think that's going to be helpful. If we make decisions that provide more clarity, it's going to be helpful to people all across the spectrum deciding to participate in this space. But that does require us to make some decisions.
Yeah, but I think, though, there's some regulatory piece of this. I think that a lot of institutions, as you call them, enterprise, are really waiting for good custody solutions, good exchanges that they trust, the infrastructure. I think when the infrastructure gets better, yes, some of these issues matter, but I wouldn't put too much focus on the SEC or even the CFTC and say, I think, solve the custody and solve the infrastructure and do the layer 2. Everybody's been talking about lightning networks and things like that. As those things get solved, then there will be more
Yeah,
adoption.
I mean, I think that's
I really think so.
Yeah, that's a great point because I think even what we're hearing is that people who are working on those solutions are hearing lots of interest from established players who are really eager for them to get those solutions going so that they can then participate in the markets.
Yeah, and so it could be products that like Fidelity is doing in custody, or ICE is doing with this backed product, or I'm using local companies.
So, I mean, essentially what Gary Gensler said was, getting the infrastructure ready and having that set up, and basically in a roundabout way saying, yeah, we're waiting for these major institutions like the Goldman Sachs, the JP Morgans, all those banks to get involved and ready to go before this takes off. And so, I mean, there's no other way to say it. And he clearly stated it. And so I think that's going to be something worth watching. And I mean, if you thought this whole time that this was going to be separate from the government couldn't touch this because crypto is for freedom and whatnot. No, let's not be naive here. And this is my opinion. It's not any kind of advice, but this is the ultimate control for the government, and and they're gonna end up getting their way. And if you want to take profits, or at the end of the day wanted to sell your crypto, you'd basically go into dollars or whatever currency that you wish. But the on ramps and off ramps would have been regulated anyways by banks, right? Because you have to have a way of selling it and cashing it into dollars. So once these custody solutions are prepared and ready to go by, the Goldman Sachs, the JP Morgans, etc., then this space will look a lot different than it does today. And here's this other video of by Making Me Fresh of a short interaction that should tell you a lot of what you need to know. Where and this is what he's going to talk about is the great financial crisis. And he alludes to the idea that, well, if there's a crisis and you need things done, the rule book may not apply because it's a state of emergency. Now, those aren't exactly his words, but listen to what he has to say, and you'll kind of come out with that line of thinking.
Which is why we have such a big rule book.
Well, we did have that little thing called the financial crisis. So, 10 million people lost their
This
jobs.
is the solution to the financial crisis right here. These guys are thinking
crisis. So, 10 million people lost their
This
jobs.
is the solution to the financial crisis right here. These guys are thinking
And that's
which is why
that.
we have.
And I think that speaks for itself, and I don't have to comment much on that. Now, Equity Capital posted this. Now, Jesse Powell says after 10 years in crypto, for the first time, it feels like we're entering the early stages of mainstream adoption. Am I relieved? No. I'm fearful because it marks the end of our ability to be ignored. Get ready to fight. Now, Equity Capital wrote, with the Library SEC lawsuit, essentially on the heels of the Ripple lawsuit, my worst fears might be realized. We may be seeing the signals that Gensler is here to drive the incumbent agenda and crush innovation that disintermediates and disrupts their legacy business models. And folks, things are gonna change. They're gonna change, and there's no ifs, ands, or buts about it. And like I'm saying, if you're wanting to be naive or willfully blind to what's actually happening, you will get crushed. So make sure what you're invested in has the utility that is needed and use cases that are needed to solve real world problems. I hope this episode has brought you some value. Like and subscribe. And you got to start asking yourself, once these major institutions start building the infrastructure and they're ready to go, what's going to happen? What major changes are going to happen? This is the Digital World Podcast, and I'll see you in the next episode.